Hello traders, welcome back to the channel. In this video, I want to show you how to trade synthetic indices using these easy ICT concepts. I've been trading these assets for a while now using the ICT concepts, and a lot of you guys have been asking me to make a video on how to use ICT concepts to trade synthetic indices. For those of you who don't know what are synthetic indices, if you've ever heard of step index, volatility index, boom and crash, all these are classes of these synthetic indices, and they are basically trading instruments that mimic real world market volatility and liquidity risks. So they have pretty much similar price delivery with your currencies, with your cryptocurrencies, or even the stocks market. So almost every ICT concepts you've ever learned from my YouTube channel can be applied to these assets. I love trading the step index because it's one of my favorite, and the only difference between their delivery and the normal currency is that this one is a bit faster and is a bit volatile, but the delivery is so perfect and okay. For instance, this is the daily time frame. I'll be showing you how I take my trade, looking from the daily to the lower time frame, and how I basically execute my trade. One thing with this asset is that if it picks a direction, it moves in that direction for a while until it reaches a certain level before it starts to go in the opposite direction. Look at this price delivery from the daily time frame. Look at this from here to here. This is a classical break of structure that we know from ICT concepts. So look at this. This is a break of structure, and price is coming back to an internal range liquidity. This is a fair value gap I just marked out for you. Notice how price came back to this fair value gap, and this is a classical example of a mitigation block. Price is reaching out to that level. So you can actually see that almost everything you've learned from ICT concepts can be applied to this particular asset. This is it. Break of structure, return to this internal range liquidity, and then another one here, break of structure right there, and then price is repricing into this fair value gap right here. Fair value gap with that other block. At that point, you can actually see that price just reached the tip of this fair value gap and then push down. And it always applies to these assets. Picking your Fibonacci tool, measuring premium and discount, you will still find the same thing. Premium and discount is just below here is discount, above here is premium. Price reached to this premium area before coming down. So you will always see this repeating itself. And then look at the most recent price action here. This is a shift in market structure from the entire movement. Price have shifted structure at this point. Let me just adjust it correctly. This is MT5. I'm not using TradingView. It's unlike the one you see me doing on TradingView. It's easy to draw lines and make sketches on TradingView. So this is a shift in market structure, and then price retraced into this fair value gap. Look at this. Notice how price reached out to this particular fair value gap that is at a discount area. Picking your Fibonacci tool, this swing low to this swing high, price is at discount and then reached out to this fair value gap before pushing up. But this is not the main focus of this particular video. The way I trade it is to look at what is happening. From here, we saw this shift in market structure. We are in a bullish market, so I will just focus on what is happening here. If I'm just looking at this chart from here, okay, I took some trades yesterday and it was Saturday. I normally trade them during weekends, and I trade only step index. Some of you trade volatility index. We have different volatility index, such as volatility index 75, volatility index 100, and several other. So look at this. This is the most recent price action right here. Price reached out to this fair value gap, and it is trying to push up to this opposing liquidity. This is where liquidity is residing, above here. It grabbed the liquidity right there, and it is coming down. So this is the reason why I dropped down to the 4-hour time frame to watch out for what will happen in the 4-hour time frame. So when I dropped down to the 4-hour time frame, this was what I saw. Price was moving, break of structure, retraced into fair value gap. And one thing with this asset is that it respects fair value gap so well. so many of the time you will find out that price is respecting fair value gap. The reason this price pushed down to this area, I traded this one. Actually, I was targeting this fair value gap right here. I was targeting this fair value gap when I saw price closed below here. So when I saw price closed below this area, you can see this large bearish candle close here. I knew that price is trying to reprice into this fair value gap, and remember the last break of structure was here. All right, so once I saw this, I knew that price was trying to push down to this area. So that was the reason why I sold in that market. From here to here was my target into this fair value gap, almost 300 and something points. So look at this, dropping down to the 5 minute, because the 5 minute is my most powerful time frame when it comes to trading with this asset. So I dropped down to the 5 minute time frame to see how that delivery will be. I wish this is like trading view so I can show you everything in simplicity. So that area that I showed you right here, all right, I saw price from that point. Where was it? Was it here? Let me go to the 4-hour time frame and show you in proper. So this is it. I actually saw this movement. Let me just mark it out with this blue line at that point so you can see properly. All right, so deleting everything, going down to the 5 minute. Remember, I told you that once this asset picks a direction, it moves in that direction straight. From here, it targets this place, but as it is, price even reached to this area. I will show you everything that happened. Going to the 5 minute, I saw that price was acting so suspicious at that level. Okay, so this was where I saw it. Price push up to this area, and look at this. I just measured my swing level from here, not even here. From here was where I measured the swing level to this area. Okay, I remember I told you this asset respects fair value gap so well, and this was what happened before I entered the trade. Liquidity residing here. I saw price came to this area. I did not even take trade once price reached here. It was when I saw price took out this small low at that point. That was when I got interested in taking the trade. Let me go back to the place. This is not like your trading view, so it's going to be a bit chunky. So I saw this little shift in structure here, and I took trade from here. Guys, I can tell you that that trade went successfully down to that area, I was targeting. So this was the reason why I took the trade. You're going to see this happen every time when you're trading with this asset, and you can see points when price comes back and gives you another entry. All these areas were entries, but from the 4-hour time frame, from here I got out when I saw this entry here. I think it was here that I got out, somewhere around here. I got out from there. So this is how I trade this. Every time I see price looking at a particular area or level, I just go to the lower time frame and find a shift in structure or a kind of a displacement that shows that price is willing to go to that area. So you're going to see this time and again. All right, so just this area. There are other places I've entered trade. I just find it difficult to make sketches and then show you the exact areas on MetaTrader 5, but you have seen how easy it is. So once price reached here, I will do the same thing for it. All right, I can easily do the same thing if price was willing to go up. But once I saw price closed here, I knew that price was done with peak liquidity from the daily high. You can see price just reached out to this liquidity and hit this bearish order block, and then it is coming down to that area. So that was why I skipped trading that one. So this was it. Let's go back to it. So the same thing happened here. A classical example was here. All right, this is a break of structure. And then if you go to the lower time frame, maybe the 5 minute, once that retracement starts coming down, it's just like you counter trading, but you know where price is going to. You know exactly where price is targeting. Let's see if I can see that exact area. This area, right? Just put our line there. So deleting everything, just leaving that place. So it's pretty much easy and straightforward to trade with these assets. It's unlike the way you have to wait for kill zones, time, hours of the day. And then if you are in GMT +1, these assets are more interesting to trade in the night. If you trade them in the night, they are so interesting to trade. If you are trading them in the night, so easy and straightforward to trade them in the night. So this was the place. So you can actually see that price reached out to this area, grab liquidity here, and then had a shifting structure right here. So these are the kind of places you want to be in the trade. As price came back to this fair value gap, it respects fair value gap so well, you are sure of this movement. It moves in a direction without coming back, moves there. You can see it reached down to that area. So you can try it. The most recent area of price action now is here, and I'm not seeing any willingness to go either up or down. So you can check this from the lower time frame, the most recent data. If price is willing to go up, well, price may be going up from here. This is a short-term shifting structure here, right, as price is coming back, but this price action is a bit chunky, so I'm not even trading this today. Look at this, price is just here. All right, so if I see price is willing to go up to that area from the 4-hour, price may reach out to a premium area from here to here. All right, if it is going down, this is my first eye. So henceforth, going to the lower time frame, I'll watch out for somewhere here. This is the shift in market structure I've been waiting for. Let me just delete everything here and see how to go about it. The 5-minute is the most interesting time frame. Look at this. We are having that shifting structure happened here. All right, it actually came in around here. This was the time the shifting structure happened here. This was the shifting structure. All right, very accurate price shift up. It never came back to, I was expecting price to come back to this fair value gap before you can take the trade up, but it's a bit chunky. Price shoot up to that area. So along the way, price came up here, coming back to this fair value gap at this point. So this was a perfect way to get into the trade, totally coming back to this fair value gap and then pushing up. So you're going to mark out this, just watch out and see how price will reach out to that area I showed you, this place. You'll be surprised to see it get into that level. All right, so guys, that's as easy as that. The same thing happens to your volatility index. The same thing, you will see the delivery so easy, respecting all your fair value gaps and all the areas you're watching. Price shifting structure, price coming back to this small fair value gap here. All right, it pushed down and then taking up. You're going to see this happen time and again. All right, guys, you can try it. Watch out for a point of interest, fair value gap, and then you're good to go to trade with this concept. All right, guys, so this is all about this video, just a short one to show you how to trade synthetic indices using ICT concepts. Thank you guys for watching. See you in the next video.